Australian government has just made a move that's going to crack the housing market wide open for an entire generation. And it's going to happen on October 1st this year. The First Home Guarantee Scheme got the biggest overhaul in Australian history. It is massive. There are 3 changes that are going to completely rewrite the rules. The first, the income cap is gone. Scrapped. That means anyone earning over the limit, previously it was $200,000 for couples, any doctors, lawyers, engineers, even if you got a single bonus, you might have pulled out your first home super saver, doesn't matter, you're back in the game. Second, there's unlimited places. Now, I know you would have seen on TikTok last year, you're going to miss out, there's only 35,000 places, all that sort of stuff. Well, now as long as you qualify, you're in. There's unlimited spots. Third, there's price caps that actually made sense. Sydney's price cap jumps from 900,000 to 1.5 million. Brisbane rockets up from 700,000 to 1 million, and Melbourne goes from 800 to 950. This finally puts a real home within reach. I'm talking a place with a backyard in a decent suburb with good schools, not a 1-bedroom apartment 3 hours from your work. All right, so let me put this in perspective with real numbers that are just going to be surprising. Without the First Home Guarantee Scheme, you'd need a massive $300,000 for a 20% deposit on a $1.5 million home, say in Sydney. For most couples, that's 15 years of just relentless savings. And then if you didn't get to the 20% deposit, well, as you probably know, you're going to get slapped with lender's mortgage insurance. So on that same home, you're going to pay a $40,000 or $50,000 fee to the bank to cover them and not you. But with the updates to the scheme, you only need a 5% deposit. That's just $75,000 on a $1.5 million home. And you're paying 0 in LMI. That money stays in your pocket for the future. It gives you extra equity. You can use it for furniture, for renovations, for a car, or just have less loan. So let's look at the money you'd save city by city. In Brisbane, on a $1 million home, you'd save around $25,000 in lender's mortgage insurance. In Perth, on an $850,000 property, you're keeping about $20,000. And in Melbourne, on a $950,000 home, you're putting $25,000 in your back pocket. It's crazy. Like, that's not a small amount of money. It's life-changing. It can help you get years ahead in terms of your financial goals. The market reality. Look, I'm going to go through warts and all on this scheme because if I didn't and just talked about the rosy times, I'm not doing my job properly. As I mentioned at the beginning of the video, the reality is the Australian market at the moment, for lack of a better word, is pretty cooked. Just look at the numbers. The national median dwelling price is sitting at $844,000. And if you're in a major capital city, the growth has just been relentless. Last year alone, Perth houses skyrocketed by 17%. Brisbane jumped more than 11%. And in Sydney, the average house is a staggering $1.5 million, with prices rising 4% over the last 12 months. And here's the crux of the problem. Last year, we added 445 new people to Australia, but we only completed 177,000 new homes. We're literally adding twice as many people as homes. And anyone that understands basic economics knows what happens next. When demand massively outstrips supply, prices tend to go up. And if you're not in the market, you're going to feel it on the other side too. The national rental vacancy rate is at a terrifying 1.2%. A healthy market should be almost twice that at 3%. So this isn't a tight market. We're in a full-blown housing crisis, which obviously was talked about a lot last year. And so the question I've been asked a lot lately is, will this First Home Guarantee Scheme actually fix the housing crisis? Well, before I go into my opinion, let's talk about the experts. They're all pretty divided on it. On one hand, the property and banking industries agree that it's a great solution. They say the biggest hurdle for first home buyers isn't making the mortgage repayments, it's saving that staggering 20% deposit, which can take a decade. They're saying the scheme is a genuine game changer. It's going to slash tens of thousands of dollars you're going to need in deposits that can help you get a home years faster than you otherwise would have. Sounds amazing, right? Well, a lot of Australia's independent experts are waving some pretty big red flags. Take veteran economist Sol Eastlake. He says he's seen this movie over decades of Australian housing policy. He argues the issue with these schemes is they don't create a single new home. All these schemes do is give thousands more people the ability to borrow more money to fight over the exact same limited number of houses. And we have more buyers armed with more money from the bank, all bidding on the same property, well, the price doesn't really go down. The opposite. Looking at previous schemes, it actually goes up. So this policy that's designed to help could actually make it more expensive for everyone in the long run. Let me show you what this really means for a couple in, say, Brisbane. Meet Sarah and James. She's a senior teacher and he runs his own plumbing business. Together they earn $180,000 and they're ready to start a family. Under the old rules, the price cap in Brisbane was $700,000. For that price, Sarah and James were fairly stuck. Their dream of a family home with a backyard was just not realistic in the current market. So they're looking at 2-bedroom units or a pretty huge commute. It was just a constant compromise. Fast forward to the 1st of October this year with the new $1 million cap, it changes their entire future. Suddenly they can look at homes they want in areas they would like to live. They could easily find a 3-bedroom house in Brisbane for under $950,000. Under the old 20% model, they're going to need a staggering $190,000 to make that work. Under a new scheme, their 5% deposit is only $47,500. That's $142,000 difference, allowing them to buy the right home in the right suburb years earlier. In their situation, it's not just a financial win. They get to bring their first baby into a home with a backyard, and they can live in a home in the area they want. In their case, it's not going to be a financial win, but it allows them to bring their first baby into a house in the backyard. They get to live without those compromises of being further away or further from work, and that's where this change really delivers. But where it will get tricky is all those places that are currently selling, say, or capped up to that 700,000 are potentially going to get their prices pushed up to the new $1 million cap. Now, this scheme isn't all roses and chocolates. There are some risks if you are thinking about getting the home guarantee scheme, especially in the case where you might have a bigger deposit. You might think, well, I'm just going to put in a little bit less, I'll keep some extra money, that sort of thing. The first biggest risk of this scheme is the high leverage. Borrowing 95% means you're starting with pretty much no real equity. I mean, there's the 5% there, but if the market drops by 5 or 10%, it means you could lose your equity overnight. That could mean that you owe the bank more than your home's actually worth, and you can't sell at that point, or you can't refinance. You're trapped in what the industry calls mortgage prison, and it's a real situation. If you're going to stay in the place for the next 5 to 10 years, and if you look at the market historically, on average over the last 30 years, the Australian property market's gone up about 5 to 6% per year. It's pretty insane. So if you look at that, looking over the next 5-10 years, you're fine. But if you're trying to get in and out of the property in a year, then this is something you really need to consider. The second thing you need to think about is interest rate shock. You're taking on the biggest loan of your life at a time when rates are unpredictable. The RBA is not looking out for your personal budget. So if they hike the rates, your payment's going to go up. And it's worth thinking about this. Could your budget really handle your repayments jumping another 50, 100? What about 500? That's what happened during COVID. You need to test your own lifestyle and make sure that you've got that little buffer or fat built in. Now, I'm not trying to tell you this to scare you, but like, this is the reality. This is stuff that people don't talk about. And it's important to go into these schemes with your eyes wide open, understanding what the situation is. The third thing to be aware of is the scheme only applies for as long as you're living in the property. So if, for example, you plan on living in the property for a year, then you move out after a year and you turn it to an investment, then technically you're not eligible for the scheme anymore, and the bank can ask you to refinance to remove that scheme spot. I had it happen to a client this week where she moved out, changed her address in the bank system, and the bank said, whoa, hold on a minute, you're not living there, you aren't allowed to have that government scheme anymore, you need to refinance, and she's potentially up to pay lender's mortgage insurance. So keep that in mind. With the home guarantee scheme, it's not a case of living there for 12 months and you can move out. No, to be eligible and to keep that government guarantee scheme in place, you have to keep living in the property. All right, that's enough fear factor, that sort of stuff. Like I said, it's just good being aware of what's important and what's happening. But what do you do from now? How do you get prepared for October 1st? How do you get all your ducks in a row and get ready to apply for that scheme? Step one is your bank statements. Now, the banks aren't as bad as they used to be. They're not going to go through your Uber Eats within reason. They're not going to worry if you had a wedding or some big one-off expenses. But if there's any gambling, if you've got any direct debits for Afterpay, that sort of stuff, it is worth tidying things up, just because the banks will generally want your last 3-month statements just to confirm your salary credits and look at your base living expenses. This is even a good time to chat to a broker. Usually what we'll do is we'll sit down, get copies of your statements and have a look at it and say, yep, Jaden, your statements look fine. All right, I can understand you had a European holiday in July. The bank's gonna be fine with that. We've got your savings, we've got your history, etc., etc. Or we might say, well, you've got a credit card, you've got a $10,000 limit, that's reducing your capacity. Maybe you need to look at cutting that to $5,000 and get everything prepared. Step 2 is knowing your real costs. Now, as I mentioned, this scheme allows you to buy with a 5% deposit, but on top of that, you need to cover the stamp duty, solicitor fees, and other government fees. So in a lot of states, you can double this down. In Brisbane, for example, if you bought a place under $700,000, the stamp duty is completely waived. So then if you're buying a place for around $700,000, you just need your $35,000, 5% deposit, plus another $5,000 or so in costs, so about 40 grand. But if you buy a place for $800,000, you need the 5% deposit plus stamp duty. So factor in another 2 to 3% of costs just to cover the purchase price, stamp duty, and everything else to make sure you're going to have enough there to buy. Step 3 is having your paperwork perfect. Well, usually when we do the application, we need your pay slips and everything to be within the last month. So if you're not thinking about applying till January, there's no point collating your pay slips and everything at this point. But if you're self-employed, the banks will need your most recent year's tax return. So it's worth looking at that, getting everything finalized, and even lodging your tax return to get your refunds and everything back so you're ready to go. Step 4 is a fully assessed pre-approval. In the current market where things are moving at a really fast pace, a pre-approval is important because it means you can move quickly, you know your budget, and you know that instead of it taking, say, 14 days, 2 weeks for your loan approval, we can actually get it done much quicker. So if you are considering making offers in the next 3 months, a pre-approval is definitely the way. At Hunter Galloway, we can help you out. We help home buyers all across Australia. So if you are looking at a pre-approval, hit us up. Step 5, and I think most importantly, finance stuff aside, is becoming a market expert. So even if you're in the early stages of buying and you're trying to work out what the budget should be, have a look on Real Estate or Domain, look at the sold section, look in the suburbs you like at properties that have sold in the last 1 to 2 months, and try and get a sense of the budget you're gonna have to pay. If you've been looking at places that sold 2 years ago, you're obviously gonna not be across the current market conditions. So this can help just giving you an understanding of, well, for 800,000, we're gonna get a 3-bedroom with this sort of backyard, or if we go further away, this is what we can get. Listen, after doing this for almost 15 years and helping thousands of people into their home, I've learned there's one thing that really slows people down. The biggest barrier to owning a home isn't having enough deposit. It's not your job. It's just the belief that you can't do it. I see it every week. Last week I spoke to a nurse who didn't realize her rent was the same as what her mortgage repayments would be if she bought her own home. There was a chippy I spoke to last month that didn't know he could start making contributions to his First Super Saver scheme to help him save a deposit a lot quicker. For both of them, they thought they were 5 to 6 years away from buying a home, when the reality is it's probably 6 to 12 months. So stop wondering what you're potentially eligible for or what's possible, and find out today. At Hunter Galloway, we're the home for home buyers across Australia. We can give you a free assessment to work out what's possible now, where you need to be, and when you can potentially buy a home. We help home buyers all across Australia getting into the home guarantee scheme, looking at guarantor loans with their parents, and other ways of getting into the market. So if you're wondering, is it possible? Can I do it? Well, hit us up and we'll find out, and stop that wondering. Just go to huntergalloway.com.au, fill out the form there, and we'd love to help. Thank you all so much for watching. Really appreciate it. If you like this video, give us a thumbs up and subscribe. Until next time, I'll see you later.